Hello, 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 everyone. Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacchino. Welcome, welcome, welcome. Hope everybody had a good trading day. Looks like we might at least put in a short-term bottom based off some of this price action. And we do have Turnaround Tuesday tomorrow, so let's see. Let's see. Hey, Dan Jet. Hey, Amit. Hope you guys are doing great. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, please come back, leave some comments, and like the video. So bounce back today. We had the Chicago Fed National Activity Index come out this morning before we even live streamed, but then the one that came out afterwards, the Dallas Fed Manufacturing Index, coming in dropping down to 1.1. So that is getting to that more bearish levels. But the street pretty much shrugged it off. You can see big mega cap rally today, healthcare rally. Remember, was watching still for a potential bigger pullback in healthcare, but that might be over. So we had the mega halves. Energy definitely pulled back. We'll peek at that. It broke down for those levels I was watching. FOMC still 50 basis points. Don't have to touch on that much. And still in negative gamma, which does affect the rallies and the sell-offs. Oh, oops. I got a little happy on the clicky. We have to go through tomorrow. Tomorrow's an important day. Let's see. Hey, Sterling, welcome. Washington Post reporting Twitter acquisition is official. It's not done yet. And the exact details, it was being shopped. And I mean, when I say it's not done yet, it's not officially private. There is still reverse termination clauses. They have not released. They paused the stock for when the announcement came out. But again, the deal is not officially signed yet. So now it has a potential double top. That is more important. But if it goes private, there is no Twitter. Remember that. If it goes private, there's no TWTR to trade. So the double top doesn't matter at that point. But yes, there are earnings on the 28th. Welcome, Davey. Good afternoon, Genomic Stock. Before we get to that, am I all right? I'm not blurry. Just wanted to make sure the camera was still working. Tomorrow morning, 7:30, before our live stream, we have durable goods forecast 1%. That's the big thing right now. The open, before the open, and then we have the house price index and a bunch of stuff related to house pricings coming out right as we're starting the live stream. And then at 9, we have consumer confidence and new home sales. Then we have the Fed manufacturing index, and we'll see how that does. We have Dallas is out today. Then we have the Dallas's Fed services index. We'll see if that's also slowed down. So lots going on tomorrow. Keep that in mind. That's before the open. Hold on one second. This is after the close. Not a lot. If we want to peek in on anything, let me know. But not a lot of stuff that's really going to shake the market after the close. So before the open tomorrow, definitely going to watch UPS, 3M, Pepsi. So that's some stuff I'm keeping an eye on. Then tomorrow after the close is going to be big, but we'll review that at the open tomorrow. So that's where we sit right now. Oh, we got Raytheon Technologies. We're still long Raytheon. Here's what we're seeing. Let's see. Hello, Christoph. Hope you had a wonderful day overseas. Good afternoon, Sashi. Jake, is that in response to the potential double top? Let's see. Let's check in on the potential double top. You don't want to be saying that out loud. Elon does not like to be shorted. Yet there is a potential double top, but remember, there's nothing really to trade here. Because if it goes private, this symbol goes away. So if you want my thoughts on it, that's my thoughts. It's one less symbol to trade. S&P Now this is a bottoming pattern, a pretty decent bottoming pattern. I'm going to be watching for a continued bounce now coming in the next couple days. That's going to determine the strength of this next bounce is going to be very interesting. Hey, Ken, I'm glad you are here. So that's what I'm keeping an eye on. And my major area for the S&P futures, about 43.51 to 43.68 over the coming days. If we can't get up that high, it would be considered a very weak bounce. And you see the daily rotation zone is coming back down just above that 43.70. So this would be prior support area becoming resistance, declining rotation zone, and the level I listed before that, 43.52, is a 50% of this sell-off. So that's my first key area I am focused on over the next couple days. Hey, John. I mean, we still have to be nimble with this kind of environment because with all these earnings coming out, if stuff gets sold, especially with tech earnings, you can see rollover plays. So this is what I'm watching for, but just like today, okay, we had the little breakdown, and then we got the strong momentum coming in with lunch and after lunch. We started getting some momentum bars here. We're choppy, momentum bars here, a little pullback, momentum bars pause, and then momentum bars going into the close. So overnight, I'm keeping an eye, and also remember we are against a 4-hour rotation zone. We could see a minor area tomorrow. I'll put up tomorrow morning if you want to do something right now for overnight sessions. We're going to use these. We don't have a great pausing bar yet, but 43.09 to about 43.12 would be the first level I'd utilize, and 43.21. You can see that 43.21 would not ignore that with the overnight because that's the top of the rotation zone. So am I thinking that provides the halt to the move? No, I think we might get a pause up there, a slight pullback before another push higher. So pullback areas, if we don't go through that right away, keeping an eye now, the major supports coming back at this 42.62 level. If you need levels before that, I just draw your retracement harmonics before that and watch about the 12.5 and 25%. We don't need to get into that level of detail. How are you going to play Twitter now that Elon bought it? Well, again, once it's dried, there is no playing Twitter. Once the ink is dried, again, the ink's not dry yet. There's even stuff that there could be still reverse termination fees and everything else. So again, the deal still has to be inked and dried. How am I going to play Twitter? I'm not touching Twitter from a stock perspective at this point because there's only downside risk at this point. So if that's what you're asking. Now, there was a wonderful tweet I retweeted a bit ago. I wish I could put stuff up here, but it was Elon Musk says Twitter will offer full self-tweeting capabilities to users for $5,000. I thought that was a fantastic tweet. So that's with the S&P. With the NASDAQ also got down below that 87.5 and then reversed. So we fulfilled that 62.5 when closed below that 62.5. We fulfilled the first target on the down move. We again have that short-term bottom coming up here, finally getting above that 13,355 level and running back up higher. Here's your 4-hour rotation zone right in there. Next target for me, need to use the forward harmonics, is about 13,600 with the 4-hour rotation zone. And on a pullback basis, I'm using short term is 13,458, 460. Why we spiked up there, that's the 25% harmonic. And then if we drop below there, major support would be 13,358. A break below that would be a retest of the lows. Other than that, the next key levels I'll be watching for tomorrow. Tomorrow, let's see here. I lowered that a little too much. I'm focusing on about 13,660 and then the 50% retracement of this down move coming in about 13,745. Dow spike hitting that first target for the double and the 62.5, and strong reversal in the Dow also. Just some divergence down here. Then we got the momentum bars. So what are we watching for in the Dow? Next key area I'm focusing on is about 34.83 to 34.150, right in here. And then above that would be, again, we can sustain this bounce. You can even sustain this bounce for quite a bit. But the next major level, if we got above that, would be 34.326. Support for the Dow, I'm keying off of about 33.770. Russell, again, coming down to this 1905 area and strong reversal off the Russell, closing above 1941. So I'm watching for a return to 1980. That one's pretty simple. DAX, minor resistance coming in about 41.75. Should it continue? And by the way, this is not a double bottom. It's not reversing enough of a move. And then I'm going to about 14,260. It's still in play. Nothing changes with the Dow double top. Nothing changes. It hit lower to stop, but nothing else changes. So that's the only thing. It hit the first lower to stop, but longer terms, the probabilities are still to retest these price action. And it's not surprising. Lots of times doubles trigger and then see a return to this key area. So we will have to see what happens tomorrow. But nothing's invalidated with it. Even with a reduced stop, you can't reduce the stop below the trigger point, because that would be you get stopped out repeatedly with those. Nice trigger double bottom in the QQQ on the 1 hour that hasn't hit the first target yet. Yep, there you go. That was right there. 330.79, 332.18, 333.57 are the targets up there. I'm really paying attention to this 331 tomorrow unless we have a huge overnight rally then. Where else was I sitting? Crude. Had the little sell-off, not quite down to that 94.15 level, and then I got some divergence in here. Then again, with everything else rallying, it was literally buy everything this afternoon, including crude. The only thing that didn't really bounce was gold much, but didn't get down to my next key level. I'm still watching 1892, and silver bounced a little. I was hoping it was going to get to 23.42. No such luck there. Your notes coming up. My next level is this 62.5 that I listed out this morning. This 120.04, bouncing off that and rolling over. I'm watching for this little potential very small double play in notes. But if it breaks down below this 119.18 level, then I'm going back to about 119.12. By the way, if you have ways to trade this, you can trade the futures. This is some great trading right now. Dollar index continued rally. Next harmonic hit. We had 101.87. And we got up to 101.86. I call that pretty much spot on with the hit there. So the next target is 102.37. Our retracement pullback level would be about 101.11. VIX spiking up, completing the double targets, and then strong reversal. So that is over. That is over. Hitting all the targets up there with the strong reversal. Now, if we continue higher, I'm watching to see how it reacts back at 25. 25 is my new prior resistance becoming support. So there we go. It's why you can follow patterns on this. Vixen also finishing all the targets, and my key level on the Vixen is 30, 85, 31 area. You can see your strong mega cap reversal now. Key resistance for this are moving up, and I'll pay attention once this bounces to about 69, 67 area. That's where I'm going to start watching for another potential rollover to see that. Still in shock about the Twitter deal. Looking forward to the platform's future. It will be interesting, won't it? As a private platform. So we will see how that plays out. Oh, Tesla. Got a question today. Question. How do you play things like for gap fills before the 62.5? And this was a great little example. We had this double bottom on the 5-minute. So instead of waiting for the 62.5, when you have a pattern like this, a little 5-minute double bottom, can you trade it prior to the 62.5 close, as we talk about? Yes, you can, because this is a highly reliable pattern in the direction, and then you can also use the key levels together to help manage the trade. Okay. So you see here was the 62.5, and you got the close above it, but you also had it hit the first target. And then you had to hit the second target, little pullback, and then hit the final targets. And that's all she wrote. So if there is a reliable pattern that triggers before the 62.5, is it playable? Yes. And there was this double bottom pattern that triggered prior to it, and you see how those levels played out throughout the day. Just wanted to touch on that for people, because you don't have to always wait. If you don't have a pattern, it's ideal to wait. If you do have a pattern, take advantage of it. Tomorrow, not much has changed. Bullish above 1035, bearish below 977, 975. About 975. That's where this flat 50 is. So that's where it sits. Right now, it's still in no man's land in this little mini horizontal channel. I have to update these levels a bit to about there. Is it possible Twitter can trade over 54.20 prior to going private? They didn't state when Elon would be taking ownership or the key details about the acquisition. And remember, it is not a signed deal yet, and terms still are coming out. It's not like this has been inked and nothing can change. So I would be shocked if it traded over 54. But again, we have to wait for the details to come out. Now the risk is to the downside. Should something still fall apart, I know the one thing that's come out is our reverse termination fees. Okay? And by the way, they were still shopping this thing up until about 12:30 Eastern time. They were still shopping it around the street. So it was still being actively shopped until 12:30 Eastern time. Do I think the NASDAQ will flip? What do you mean? Do I think the NASDAQ will flip? Is that flip up or flip down? We already got a short-term reversal pattern. I'm expecting that to follow through potentially for the next couple days. And then we'll look to go back to, well, again, still nothing's changed on the long-term bearish. It's the short-term bullish, long-term bearish. That's why I think there's reverse termination fees. And I'm waiting. I'm surprised they unhalted the stock until they released the terms of the deal, because the stock got halted and we don't have the full terms of the deal out. So that is, I should say, the potential deal, because again, it's not been inked. Can deals fall apart at the last minute? Yes. So that's where it sits. So again, if you're trading this from the long side, my advice, on my unsolicited advice for educational purposes only, so hold on, I was just reading a comment. So would be, if you're, I'd be locking in. Let's just go look at Twitter again. I'd be looking to lock in my profits on any long plays up here and not get greedy for another couple. I mean, we're sitting there 51.94 post. I wouldn't be trying to eke out a penny to risk bucks if this thing were to fall apart. Not saying it will. I'm saying don't be penny wise and pound foolish. Like, let's say I need that 54.20, that little more upsized squeak out, versus if something were to happen with the deal, your risk is to the downside right now. Hey, Ahmed here, member of the Only Future Exchange here, PMEX, friend of Nick from Basis Capital. Yeah, I know Nick. Want to have your interview for 5 to 10 minute tops for new traders on technical analysis. All right. You know how to reach out to me. So please do so. Just to recap, we have FOMC meetings next. We have the FOMC meeting next week, not the minute. And this week, Google earnings tomorrow and Apple Thursday. Yes, we have still lots of earnings coming out. There's lots of market moving stuff. For example, this is why you have to be nimble. All right? Nothing tomorrow morning that can shake the market huge that I see. But after the close tomorrow, you got Microsoft, Alphabet, Visa. All right? Those are some biggies. Visa in terms of consumer spending and potential, if their defaults are ratcheting up or anything else, and of Microsoft and Alphabet because of the mega caps. So do keep that in mind. Then on Wednesday after the close, you have Meta, and we have Qualcomm. And then Thursday, well, you do have to still Twitter, but Thursday after close, you have Apple and Amazon. And again, Intel. Intel's not really market moving, but it will impact the semis. But Amazon, Apple, Facebook, Microsoft, Alphabet over the next 3 days after the close. So that's where anything can happen still. That's why it's got to treat this very nimble within these market environments. That's where I don't want anybody to get comfortable, so know where your stops are. All right? Now, statistically, like in the S&P and the NASDAQ now, this is a fairly reliable bottoming pattern. Is it guaranteed? No, it's not. I'm expecting the higher prices, but I will be prepared to watch intraday for topping patterns that could be in effect, and always in for momentum bars to the downside, which can reverse a move, because longer term, everything is in still a bearish price structure. So this rally in the NDX is just a relief rally and reconnect with the rotation zone. But if earnings aren't strong, then we continue down. Earnings will still be strong. It's still going to be based off of guidance and what's forward looking. So earnings can still come out strong, but that's not the major driver, because if stuff isn't guided correctly or they don't talk on the calls to what questions are asked and people think the future is not going to bode well, they could get sold on that. It's more so in this environment because of where we're headed with the Fed raising rates, with an economic slowdown, that what's the future going to bring? That's the risk. And yes, why I can still say this is because with long-term, the long-term systems are in place with sells. So you get these rallies. You get these strong rallies. And we're also, remember, what else? So I put all these pieces out. What else are we in? We're still in negative gamma. Why do you think I show this every day? We're still pretty deep in negative gamma. What does that mean to you? That means you can get these strong rallies and you can get strong sell-offs. So you have to be prepared for it both ways. And that's why I'm still going to go what I started talking about, I guess it was 3 weeks ago at this point, tactical trading. We have to be tactical trading. If I just had to put on one position and walk away for 6 months, it would only be a long-term bearish position. But that doesn't help anybody on this channel if it just goes, oh, I'm in bear mode for whenever. I'll let you know when I'm back to long-term bull mode. Then that doesn't help anybody learn to analyze and trade the markets. So you don't have to ask me every time long term until I say long term is shifted back to bull mode. Long term is still in bear mode. So any of these rallies, even if we rallied back up, to 4,500, would still be in bear mode. You can take advantage of the trades, though, just like Sterling pointed out, the pattern in the QQQ. Okay, can this be played tomorrow, assuming you don't gap through the last target if you don't already have it on? Yeah. If you already have it on, then you already have your potential bullish play in place for tomorrow. Could something happen overnight and this comes back down, gaps down, and stops it out? Yeah. But that's part of trading. Is JNK a percent B buy after the close today? Nice bounce today, but still against our daily rotation zone. Yes, it is. Yep. You have a divergence, you have a percent B buy. It is against the daily rotation zone, so as I say, it's aggressive. You also have a cycle divergence, and you have an RSI divergence, and you have a percent B buy. So could you see a continued bounce for a couple days? Yeah, but I would not get greedy with a play like that because you're against the daily rotation zone and you're against the weekly rotation zone. So I just wanted to see where this last little down move. So keep that in mind. So it's a short-term little bounce play, but that's only for if you're very nimble, because you come up here to like this 100 mark again and then roll over pretty strong. Yeah, very easily. I don't know how he's going to finance the whole thing yet. Yeah, you'll have a margin loan, which means he's got to put up more Tesla shares, which gets very interesting if Tesla has any down moves. I don't know where he's putting together the funding yet. So we'll have to see with terms of the deal, and stuff's going to come out over the next couple days where it's all being put together. That's why until it's inked, we shall see. We shall see. What else is going on? Let's just take a look at Apple, nice little reversal off the 200. And there was a gap fill in there. Apple, continuation rally. My next target would be 165 before earnings. Sold half of your veil puts at end of day. Okay. Could be an interesting little gap play before another rollover, potentially in veil. We'll have to see how that plays out. Let's check out on Microsoft again. Remember, earnings this week. So Microsoft, don't love this pattern here. It's formed as triples, so I'm just watching for bounces into the rotation zone. And again, earnings coming up. Google, major resistance. Keep this in mind too. Major resistance about 2,500. So this is just a bounce play. And let's see. Facebook, which didn't do anything above, get back slightly above key support, but if anything, this is just a potential bounce play to the daily rotation zone. I know we got some people with NVIDIA. NVIDIA, for me, is a bounce play only. That's old. Ignore that. Bounce play only, watching for this prior. Remember, we had all these bottoms in here, watching for a return to possibly about 208.50 area. With that, I'm not seeing anything else. So I think I'm going to wrap this up. I got a lot of catch up to do tonight. See what can be What's coming out, I'll still follow to see what's coming out with Twitter, and we will have to see. There's been a lot of questions. How is it going to be paid for? Don't know yet. Can you explain support shelves? Can I say, well, this would be, it's essentially a horizontal channel. So you have a really nice support shelf right here. So it's a repeated test of the same level that turned, and it's a repeated pretty exact test of the same level. You see this, if I zoom in here, you see how close all these bottoms are? That's a very strong support shelf. Versus an area. So this is a strong support shelf. This is a weaker resistance shelf that popped through and then reversed to, but you can still see in this area right around in here, this is not as strong as the support shelf, but that's a weaker resistance. I guess you call it a ceiling. So those are the two levels I'm watching, but you can see repeatedly with this testing of this level that's now key. We break below it, there's going to be stops right below this level at this point. And that's that 975 level. So that's where, if that level breaks, that's where I go to bearish mode for the next pullback areas. And the next pullback areas, first one would be about 930, and then I'd watch the 200. One last one, Coke. Again, this looks Coke. We have this. This is a potential double still. I hate when it's still valid. Now, if we get another strong push up tomorrow, it will be invalidated, but this is technically a valid pattern with the 4-hour rotation zone out of the way, and it would trigger. It's going to be a lower probability due to its formation and due to it being against the daily rotation zone and the weekly rotation zone, but that's one to watch for. It is still a valid pattern unless we push up tomorrow morning back into this 66.75 area, then it will be invalidated. All right, with that, I remember I'll be on tomorrow at 8 a.m. Central Time, so I will talk to everybody then. Bye for now.